Good morning, everyone. You're watching live Daily Market Outlook for Monday, 18th of March 2013. Beginning of the new week is basically writing the new history of the European Union as I would say quite dangerous precedent happens in Cyprus, where the banks, the government in decision to achieve the bailout made this measure that will put the hand directly in the investors, in the bank customers' pockets, and take between 6.9 and 10% according to the size of deposit, in order to gain 6 billion euros that is required by European Union to get the rest of the bailout money of 10 billion euros. Back in May 2012, fears that Greece may leave the EU triggered bank runs in the country, and the number of economists speculated with the possibility of the countries establishing a correlator, the economic measures taken in Argentina at the end of 2001 that almost completely froze bank accounts and forbade the withdrawals from US dollar denominated accounts. Bank runs extended then to Spain and Italy, although they finally came under control. But revival came back this week, and the Cyprus bailout approval, as I said, will cost approximately 6 billion to taxpayers, which today and tomorrow will be declared as a bank holiday, will likely find something different in their bank accounts. Being taken between 6.9 and 9.9 imposed on all percent deposit on all deposits over the insurance threshold of 100,000 euros. For accounts below the insurance ceiling, the one-time tax will be 6.75%. The Cyprus PM Cyprus Finance Minister Michalis Saris admitted that it was a tough decision, and even stated that he would, like he wasn't the minister to do that, but although he added that much more money could have been lost in a bankruptcy of the banking system, or indeed of the country. And as immediate unexpected reaction, the euro dived, and the traders squeezed the Japanese yen higher during the Asian trading on Monday. Yes, Cyprus bailout news plan triggered the heavy risk aversion action in the market. We faced a gap of over 100 pips of euro-dollar opening lower, while dollar benefited against most of the majors. Breaking with the previous EU protocol, which is one of the most significant things in this point, that citizens' savings are sacrosanct. Eurozone finance ministers demanded that Cyprus will pay up to 9.9% of their deposits in exchange for 10 billion euro and $13 billion bailout. And this is what is the most important thing, as already reaction is seen in Spain and Italy, as the number of people are running into the banks, and of course the domino effect will be seen this morning on the opening of the banks. And Cyprus is the public holiday that is extended for tomorrow, and the parliament is going to vote today whether to approve this tax or not. There is still an unclear situation, despite the president's quite dramatical speech last night, as the ruling party doesn't have a majority in the government, in the parliament, and we'll see what will be the outcome. However, the most significant thing is this is the precedent that never happened before, and it might open the Pandora's box for something else much bigger, that of course will have sort of a domino effect especially through the neighboring countries and the cash-strapped countries such as Italy, Spain, and Portugal. We are going to take a look now in the technicals and see what was the immediate reaction of this, as the market has expected opened with gaps. Most of instruments opened with the gaps last night at the beginning of Far East session, and starting with euro as the most significant instrument that opened with over 100 pips gap lower. Closing price on last Friday was at 130.70 and the opening this morning was at 129.08, so we're talking about 170 pips difference. The euro basically returned to the lows and dipped below the last week's fresh low at 129.10. We can see it on the daily chart. That shows quite a significant extension lower, and basically the bearish tone that has been established on a reversal from 137.10 is now increasing pace as the last psychological support at 129 has been cracked, and the pair is now looking for an extension down towards our next target that has been formed on a break below 130.00. We're talking about 128.75, which is 50% retracement of the larger 120.42, 137.10 rally, and just below this there is a 200 days moving average at 128.64. Quite a negative tone now is increased after the gap lower opening. Quite extended the conditions on the hourly suggest some corrective action that is currently underway. Yes, the single currency bounces off overnight's low at 128.79 and runs above 129.00. The first significant barrier comes at 129.54. That is 20 days exponential moving average, and then we have 38.2% retracement of the entire fall at 128.66. With the 129, approximately 130 zone, which marks a 50% midpoint of the current gap. Filling the gap and rally above 130.50, I would say, will give some more positive signal and will avert immediate downside risk. Otherwise, more downside action could be quite a likely scenario, as the euro failed to regain its previous high and the initial barrier at 131.33 on Friday's run. That stalled at 131.06. As said, quite a negative tone that has been now established on the 4-hour chart sees the downside more favored, and opens our targets on the downside 128.75 and 128.64. As long as trading below these levels at 130.50, 131, more pressure is to be expected towards the downside. Daily structure is negative and again sees more focus towards the downside, as 20 days exponential, simple moving average is now capping the upside and seeing a more focus towards our downside targets. From the other side, British pound remained well supported after opening of the Asian session following the recovery rally of 148.30 last week's fresh low that so far reached 151.75 en route to our initial target, which is 152.00 and then 152.20. Breakpoints seen as a trigger for some stronger recovery, and they are averting immediate downside risk as a part of the larger downtrend of the cable from 163.80 piece of peak of 2nd of January 2013 that so far retraced 61.8% of the larger rally from 135.01 to 170.41. This we are talking about a bounce in 2009, and since then the pair was within this certain range. A loss of that range of the floor of that range that was at approximately 152.30 zone, and especially a break below 150.00 as psychological support sees the downside much more vulnerable at this point, and the extension down towards 147.80 initially and then 142.30 is seen quite likely. Back to the near-term structure, current bounce from 143.80 is so far well supported, as we can see on the last Friday's intraday lows are again acting as a good support. We are talking about level about 150.70, what is also 55 days exponential moving average so far protecting the downside. quite quiet movements during the Asian session, show no much action, but prevailing negative tone on the near-term time frames still sees, on the hourly time frame still sees the downside vulnerable as long as we are holding below 151, 151.20. Risk is still seen for possible test of 150.70 that may open way for further retracement of the rally from the latest upleg from 148.30 to 151.75. This is the highest seen last Friday. 4-hour structure is more positive at this point and still sees room for a fresh extension higher as long as on the downside levels approximately 150.25, 150.00 stay intact. We have the bullish crossover of 20 over 55 days exponential moving average as well as 50% at around the 50.00 zone. 150.14 is the 50% retracement, and only break below 150 would have more significant impact and basically would risk formation of lower top. Otherwise, any reversal above here, ideally holding above 170, could open way for a stronger recovery and a possible test of our key barriers of the near term at 152 and 152.20. I think we opened the wrong chart. Okay, dollar yen came under increased pressure after last Friday's loss of last Friday's higher base, last week's higher base at 95.40, with the acceleration seen down on the gap lower opening. The price closed on Friday at 95.25, and this morning opening occurred at 94.60, with the fresh extension overnight seen to 94.30, threatening for some stronger corrective action, as so far over 38.2% of the latest upleg from 90.85 low of 25th of February to 96.70 has been retraced, and the 4-hour indicators now in the negative territory see potential for a further extension higher. The 55 days exponential moving average is now limiting the upside close to the last Friday's closing price, and the possibilities of minimizing possibilities of possible gap filling and extending higher. From the other side, hourly conditions are quite extended at this point, and we can see the reversal of RSI that is already above the oversold territory and above its 7 days moving average. MACD is slightly turning higher, while the momentum 22 days is still well in the negative zone and still pointing lower, showing that quite weak structure of the pair following a pullback and acceleration through the 95.40 and 95.00 sees for now not much potential for some stronger recovery. From the other side, the overall bulls on the larger picture are still in play. Appearance of bearish divergence on the MACD and the RSI could risk some stronger reversal. Of course, we have to see the clear break below the 94.50. These are the previous peaks that have been cracked during the Asian session via dip to 94.30, but still no clear break here as the price returned up towards 95 zone. Clear break there, and the 93.80, which marks 50% retracement of the entire 90.85 and 96.70 rally, break of which is to confirm the reversal and the open way for a test of the levels on the downside, where we have 93 zone, which is 61.8%, and then 92 zone that is also a previous strong support and range floor, below which we'll be talking about some stronger recovery. Until then, still possibility of bounce higher is quite likely. Of course, the minimum requirement is filling the overnight's gap and the regain of the levels above 95 handle that will open way for possible extension up towards 96.00 and the 96.70 recent peak posted on 12th of March 2013. As said, the dollar is benefiting against the majors, and that shows on the dollar Swiss action that opened conversely up higher. Closing price last Friday was 93.86, opening today at 94.26. We're talking about some 50-60 pips difference, and immediate action higher so far jumped to 94.54 over 38.2% of the latest descent from 95.65 to last Friday's low at 93.77. Gains so far are limited by descending 55 days hourly 55 days exponential moving average, and the failure to break here could keep increased risk of further extension lower, as the studies are still weak on the hourly chart. On the 4-hour, negative tone prevails and sees again more risk towards the downside, as most of the indicators are still pointing lower, are in descent and are in descending mode, as we lost initial support at 94.30, then 94.00, and the 93.90 that were the previous higher platforms. Extension lower threatens now down towards 38.2% retracement at 93.57. We are talking about retracement of the entire recovery rally from 90.20 that peaked so far at 95.65. However, break above initial resistance that is at overnight's highs at 94.50 zone, and a break above more significant last Friday's consolidation high tops and intraday highs at 94.70 would bring some more positive tone, and basically would confirm the current gap higher opening structure that will look for a stronger recovery. Break above 94.70 and then 95, that is approximately 61.8% retracement, is required to refocus the recent peak at 95.65 and resume the larger rally higher of recovery rally of 90.20 low of 1st of February 2013. With the brief break below 200 days moving average that is currently at 94.22 seen last Friday, and the closing below this level did not producing so far the a lot of benefit for the pair, as the opening today is again above the 200 days moving average, and a lot depends on the today's closing. As said, overall bulls are still in play and still see more focus and potential towards the upside for test of the recent peak at 95.65 that will open at the later stage 96.00. And finally, commodities, gold finally broke above psychological 1600 barrier on the overnight's opening that showed a slight gap higher, and picking at 16.08 so far, and holding the positive tone so far for a possible extension higher. Positive structure on the 1 and the 4-hour charts sees potential for further extension, as the yellow metals price was congested in past few sessions below 1600, unable to break, even dipping as low as 1576, but overall tone is still aligned, bullishly aligned, and still sees potential for possible extension higher towards our key barrier, which is 1620. This is the high of 26th of February 2013, and also 50% retracement of the larger 1684, 1554 descent. That will bring the price into more safe zone, and avert immediate downside risk of revisiting a recent low at 1554 and the critical support at 1520. So far, the positively established tone on a break above 1600 sees that potential, and is supported by positively aligned near-term studies that may see further extension higher towards our key barrier and the break point at 1620. On the upside, the targets come as follows. We have seen so far over 61.8% expansion of the third wave that commenced from 1564. Interim support en route to 1620 seen at 1655, that marks 76.4% Fibonacci expansion, while break above 1620 is expected to open 1631. That marks 100% Fibonacci expansion, and also marks 61, close to it is 61.8% retracement of 1684 to 1554 descent. We're talking about double Fibonacci resistance at 1630 zone on a break above our trigger and the pivotal point at 1620. On the downside, 1600 now acts as the initial support ahead of last Friday's lows at 1590. Ideally, any dips should be contained somewhere around 1600, 1590 in order to keep immediate bullish structure in play. Otherwise, break lower my threat and test of the recent range floors and lows of the previous trading, 1576, 1565, and 1561. That my risk return, loss of which my risk return down to 1554, low of 21st of February 2013. And finally, the crude oil that starts the week at the back foot. Again, we have the gap lower opening following a rally to fresh high of last Friday at 93.82. We have seen the break above congestion at 93.40 zone, 93.82 seen so far, and then reversal lower and acceleration on the gap lower opening. It dipped as low as 92.13, and basically it's marking a 38.2% Fibonacci retracement of the entire 89.55 to 93.82 rally. More negative tone is seen now on the hourly and 4-hour chart indicators that are still in the positive territory, but descending lower and then are negatively aligned, especially that the price broke below the bull trend line drawn of 89.55. That may risk further extension lower. We have quite significant support at 92 zone, double bottom lows of 13th and 14th of March 2013. So far these levels are intact, but a break here would risk a stronger reversal. There is a signal of consolidation above the overnight's lows at 92.13, with the hourly RSI now starting to point higher, yet a quite weak structure of the other indicators shows that not much of the corrective action is seen for now, especially that the dollar is benefiting now against the majors. That also affects the crude oil price. I would say at this point more risk is still seen towards the downside, and the break below 92 is to open next significant supports at 91.60 zone. That is 50% retracement of the entire 89.55, 93.82 rally. On the upside, break above 93, approximately 93 is set to open way for a retest of recent high. Of course, filling overnight's gap is required. And that's all for today, Monday, 18th of March 2013 from my side. Please, is there any question, comment? You can submit it right now. Okay, it seems that we have no questions for today. Again, main focus remain on Cyprus today, and today the Cypriot Parliament will likely make its final decision whether to vote for this measure that will bring 6,000 billion euros from the taxpayers' saving accounts or not. So in any case, this is going to be going to have quite great impact on the markets. Any positive reaction might be already priced in on the overnight's movements, while voting for no would be another quite strong signal as this might trigger a default and the bankruptcy of Cyprus banks as well as Cyprus government. So we will have another impact on the market. Is the Cyprus question affecting Windsor? Look, financially, yes, as we all live and work here and have our accounts here, that's the only thing that could affect us for now. Windsor is quite a strong entity, company that has the significant capital and cannot be affected by such a things. Politically, possibly that could be some reaction. So far, I have seen people just commenting, but there is no any protests or anything. So I don't think that there will be something more significant. Simply, that I think the people will just accept this as it is and looking for the better future. This is what the Cypriot president said last night. Vote for this, and we will have some future. Otherwise, it could be quite difficult. In certain things, I agree. In certain things, I disagree. But nothing to worry about. Windsor as a company. We are completely safe and protected, and minor damage for us will be done from this, but hopefully more stable situation in Cyprus that will be likely improved by bailout will again bring more stability and averting any risk for the further damages. Yeah, this is quite bad, and this is the first time in the history, so we'll see how it's going to be. Yes, you are very welcome to come for holidays. Cyprus is a beautiful country, and we have a beautiful day today. It's a public holiday, of course. We have to work, and as the markets are quite active, but you are always very welcome. It's worth coming and seeing this country. If there is no further questions, then I would like to thank you all for being with us, and of course back tomorrow morning at the same time at 8 o'clock GMT, 10 o'clock local Cyprus time. I believe we'll have some other news and comments after today's day, and we will we'll have a more clear picture what is the near-term future for the Cyprus and the currencies according to the recent reaction, as the Cypriot government parliament will make their final decision verdict likely today, and then we'll see how the things will be developing. Wish you a nice day, a nice beginning of the week, and of course a lot of success and profits in your trading. Good luck.